Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, September 10th, 8:45 a.m., and we are here once again on another episode of the Market Open. We've got a lot to talk about today, folks. A lot is going on. We had the Apple event yesterday. Lots to discuss from there. Got some new Apple updates in the courts today from the EU. Got some Google updates in the courts as well from the EU. Oracle earnings we've got to dive deep on, not because I want to buy Oracle stock, but because I think Larry Ellison yesterday on that call pretty much said what I think anyone who is curious about AI or data centers needs to hear. He's one of the only CTOs I trust right now talking about data centers. And when you analyze some of those quotes and read what he says and look at Oracle's RPO, you start to realize, hey, maybe AI, this data center GPU stuff, it's not just fake. So it's another case study outside of NVIDIA that I want to dive deep on and learn a little bit more in terms of what's going on with the AI thematic. And then obviously, we got to start off with the first topic of the day, which is Palantir. There are two updates on Palantir. I'm going to go deeper into the second update in a little bit. I just want to give you the headlines right now. Bank of America, Mariana Perez, the analyst who has covered Palantir since $6, has upgraded Palantir from 30, which was already one of the most aggressive targets on the street, to $50 freaking a share. We're going to talk more about that in a bit, but this is very exciting. I had a chance to meet Mariana back in DC 3 months ago. First of all, she's a beautiful woman. She's so nice. Her smile just lights up a room. And Arnie and I got to talk to her for about an hour, and we said, hey, why does JP Morgan have a $12 price target? You have a $30 price target. At the time, she had a $28 price target. And she was like, Amit, the JP Morgan dude doesn't understand defense. He only understands software. I understand defense and software, and that motherfucker doesn't know what he's talking about. That's how she said it in a very nice, intellectual way. So really exciting to see her upgrade the stock to $50. Now, before we get into the upgrade from Mariana on Bank of America, in the pre-markets, folks, Palantir is at a 52-week high. We are at $34.79. We closed at $34.60. We closed above $34.50 for the first time since February 2021, up 14% on the day. This is on the heels of S&P 500 inclusion. Obviously, the street is excited. We have a video message. Some of you guys might have already seen this. If you've already seen this, I'm sure watching it again wouldn't hurt. Alex Karp, CEO of Palantir. I'm going to play this full video that he put out yesterday. For those that haven't seen it, it's quite a treat. He put out a message to Palantir employees and shareholders about this momentous occasion getting into the S&P 500. Here we go. What CEO starts a video like this, dude? What CEO in the public market starts a video like this? in the forest running? This is just incredible.
On Friday, Palantir was admitted to the S&P, which is an enormous, momentous occasion for every Palantirian. It is enormous because the way in which we built the company should have precluded membership to the most elite institution in economic life, the S&P 500. In order to be on the S&P 500, you have to be GAAP profitable, which is a financial way of saying you have to make real tendies, subtracting everything, after subtracting every form of remuneration that could possibly be.
He just said tendies. He just said tendies.
Including your well-deserved equity. And we did it. And how did we do it? We built the best products in the world. We started off in one area of the West, clandestine services. We migrated into the military, into spec ops, into U.S. commercial, and into commercial globally. And how did we do that? We built products, first PD, PG, then we built Apollo, then we built products for the spec ops, then we built Maven, then we built Foundry, then we built the ontology, and we then integrated that into AIP. All of these products were conceived and productized and now are being platformized, meaning we are taking them and making them the base substrate of what enterprises do i.e. using us instead of what sometimes could be described as a monster internally that prevents the use of the most important technologies of our lifetime, i.e. AI and large language models, as an end user. And these were conceived again and productized in some cases a decade before anyone else even thought that you would need them, much less that the whole enterprise would turn on a platform that actually could power AI and large language models. It's still radical to the point where people do not completely comprehend. They do not comprehend how we could have turned a switch and gone to GAAP profitability and gone from what adults, professional managers, and some analysts thought was a Frankenstein monster powered by a freak show leader, me, to a dynamic, clearly profitable company worthy of and admitted to the S&P 500. And we did it our way. While everyone is now running around talking about how they should build platforms, how you should try to get Palantirians, realizing that no credible institution in commercial life can really be built without Palantir or an ex-Palantirian. We had already begun this. At the DPO, we rejected professional management, people everywhere discussing how to build companies in a way that keeps the somewhat, if not toxic, often carcinogenic influence of people who've written PowerPoints out of your company. Palantir did this naturally. Our products reflect that, our culture reflects it, our revenue reflects it, our quality of revenue affects it, reflects it. And by the way, our investor class, people trying to use the term retail investor, which is another way of saying people courageous enough to invest their own money, otherwise known as tendies, in what they believe in.
This part to me, I mean, I know some of you guys watched this last night. If you're hearing this for the first time, when he said people people tend to say retail investors, he's basically implying that, Wall Street thinks retail investors aren't sophisticated. The reason he's saying this, as Shem Pasta says in the chat, that's us. Correct. That is us. He's talking to us. The reason he's saying this is because no one was buying this stock other than retail when it was trading sub $10. And that's why he's showing appreciation for retail investors, because he knew at the time when the company was down in the dumps, when he was banging on the table, when they couldn't figure out sales, retail believed in him because retail had the vision to think outside of the box and not listen to the people that only called Palantir a black box. And that is why I think he's giving us this shout out on a public stage. And it means so much, because at the end of the day, this is a CEO that recognizes that retail is not dumb money, but retail is just people that have the courage, as he says, to think about their own financial destiny and then do the research that's needed to hopefully compound their capital for a long time.
And look at the list of the people, our partners. I hate the term clients, but look at the list of people that use our product. The most important clandestine services, the most important special operators, the most important AI targeting work in the world, the most important allies, none of whom we're ashamed to support in private or in public. They rely on Palantir. Look at our list of commercial partners in and outside the US, but especially in the US, that use Palantir, either at Foundry, the Ontology, AIP, all the above, and are beginning, and in some cases are already using our platform as a platform. And then look at our structural advantage of having a company built around what you ought to build, not what you were told to build in some weird, otherwise called artistic program that's kind of academic and imposed upon you by people that have no skin on the game. We resisted that. We are going to continue to resist that, not just for our sake, but for the sake of our partners that rely on us. And in any case, everybody, all of you who are inside the company and around the world should celebrate that the rebels won. The rebels won on Friday. I don't know any other occasion like this where the rebels actually got inside the gate and helped the institutions transform themselves. And there's no better metaphor for that than being admitted to the S&P 500. And while it's maybe not the most important thing, I am really, really, really happy because we did this together, and the future belongs to us. So let's go attack, have some fun, and celebrate a momentous occasion. Thank you.
I mean, I don't know how you watch that and you don't feel something, especially if you've been part of this journey for a long time. I got a lot of messages last night when that video came out. What he said at the end, I think, is very important. First of all, he said he's really effing happy, and I think we could feel the raw emotion because this is a guy who, as he said, is a rebel. Palantir is a rebellion against the way software companies should act, the way software companies have historically been valued. And this is not like, pie in the sky abstractions. If you look at software companies, Snowflake is the best example, pumped up by Wall Street, a company that is good, but it's just not the type of transformational software that Palantir is. They're the ones that get all the mainstream establishment love. Palantir's the rebel. Palantir's the one that gets the retail investors that are dumb money buying it at $6, thinking, Wall Street hedge funds looking at these guys like they're idiots while they're buying Snowflake. When in reality, people like Arnie, people like RC, people like Gokar, people like Adam. A lot of you guys know some of these people in the community. I mean, the amount of research that they've done to really understand this company at its depths when it was low. Those are the rebels. Those are the people that I think Karp is speaking to. So I think the point of this message was very important, because whatever happens to the stock, whether it pumps to 35 or 40 or it goes back to 27, I think is irrelevant. Palantir is in the S&P 500. This is a long-term growth story that's going to play out for the next 10 years. In the next 10 years, if your average is 35, I still think you're going to do well, even if, you didn't get in the days when it was $6 or $8. But the point is, Karp is acknowledging the fact that retail is it was a crucial foundation of this story, and that the company was built to be an anti-establishment company. They didn't work with Russia and China. They did a DPO. They made JP Morgan and Goldman Sachs really pissed off when they didn't let them make billions of dollars by underwriting the IPO. They did it their way. And because they did it their way, in a world that, being authentic in this world is a gift. It's a freaking gift. I think partly that's some of the reason you guys are enjoying the market open, because there is a level of authenticity that I strive to achieve every single day. That is, if you guys are, have listened to some episodes of the show, that really is my motto. How can we make this show as authentic as possible? How can we not sell out? How can I come every morning with as least bias as possible to provide as much objective data? I'm going to have, my opinions on certain topics, but how can we make this an experience where people actually get value? And I think Palantir, that is the Palantir philosophy. I'm just doing and adopting what Palantir has adopted, which is, hey, how do we give our clients so much value that it becomes impossible for them to reject us? And then it becomes impossible for the street to not analyze us in the way they deserve to analyze us. And that is being rebellious by nature. That is being authentic in a world that is filled with gimmicks. And that's why I think Karp deserves this moment. I think that's why the company deserves this moment. And that's why all of us deserve this moment. 34.90 in the pre-markets. Do we get to 35 today? Look, either at 9:30 we have a massive sell-off, massive dump at that 34.90, 34.95 level, or we bust through 35. I want to say we bust through 35 because we got a big price target upgrade today. Market's green, macro's good. We got a ton of macro data coming out. By the way, CPI, it's looking like it's coming at 2.6 from all the reports I read this morning. CPI is going to be out tomorrow. I'll be live at 8:20 a.m. Eastern. I think that the macro is going to be good this week. I think we're going to have some good buying pressure. Bank of America clients, Bank of America put out an equity research report. They bought $2.8 billion of equities last week on the worst week of the stock market in 2024. So you had some of the institutional clients start buying a crap ton of equities because some of these prices got really cheap and discounted. I think so far we haven't had crazy bad macro data this week. We'll see what happens throughout the rest of the week. But if we have a really good macro to end out the week, 10 cents away from 35 if there's not a ton of sell side pressure. And really, what's the reason to sell outside of just like you think it's overvalued, which is fair. I get that. But in terms of like fundamentally selling versus staying with the growth story, I think there's going to be more people that go long than short. But we'll see. We'll see what happens. 34.89 on Palantir. Last thing on Palantir, and then we got a lot more to talk about with everything else going on. Bank of America, $50 price target. I'm working on getting the official report. I'm hitting up my plug who has the research reports. But until then, this is what Mariana said. In 1980, AT&T hired a consultancy company to estimate the market size for cell phones by the year 2000. The study suggested there would be only 900,000 users. The actual number of mobile subscriptions in 2000 was 100 million. or more than 100 million. These early estimates also fail to anticipate the world of apps, streaming, smart devices, and ultimately how this new product would bring forward the first public trillion-dollar company. We view Palantir's capabilities, technology, and path forward facing a similar fundamental misunderstanding. The upcoming S&P 500 inclusion provides a watershed moment for institutional investors to revisit what they know about Palantir. We reiterate our buy rating and raise our price target to $50. Now, this is a big deal, folks. Why is this a big deal? Because Mariana is not a bullshit analyst. When I talked to Mariana back in DC in May, she analyzes numbers pretty deeply, and she was talking to me about a company she downgraded, and she was just like, yeah, their CEO just didn't put up the numbers, so we had to downgrade them. Like, she was kind of ruthless with it. She was like, if the fucking CEO can't put up the numbers, then she can't give them, a higher price target upgrade. So when she was talking about Palantir, she was just like, look, Carp's executing, and that's why we keep raising the price. We understand the thesis in terms of defense, software, etc., but Carp keeps putting up the numbers, and that's why we keep continuing to raise our estimates. So when I see a Mariana upgrade, I take it very seriously. And the reason I take it seriously is not only does she care about the numbers, but she's been following Palantir for the past couple of years. She had an $18 target when the stock was 13. I think she had a $13 target when the stock was like $8. She's always been a little bit ahead of the curve because she saw something special in the defense side of the business, along with the software side of the business. Now that the government business has reaccelerated along with the commercial side of the business reaccelerating, you're starting to see real momentum. S&P 500 basically establishes, I think, to Mariana that from an institutional perspective, Palantir is being adopted and being recognized as like a leader when it comes to AI, SaaS, et cetera, and defense as well. So I think for the Bank of America, the equity analysts, when they see S&P 500, they see legitimacy from the real elite institutional angle, and they get to justify to their clients, hey, like, we told you it was a good at 13, at 6, at 18, at 24, at 25, at 28, at 30. Now we're telling you it's probably still good. Look, we've been right for a long time. And now the S&P 500 agrees with us. So I think from that perspective, as Myra says in the chat, everyone is taking Palantir seriously right now. And that's why it's important. Matt says, Amit hates on analysts that raise their price targets when the stock is going up, but cool when it's a Palantir upgrade. I think that's actually incorrect. I hate on price targets when a stock is going up if there's no fundamental reason to justify the price. So all these people that upgraded Apple when it was going from 190 to 230 at the peak, and they're like, AI super cycle, AI super cycle, AI super cycle. If you listened on the market close, we talked about this yesterday. If you listen to Gene Munster from Deepwater, or the other Amit from, I think he's from Evercore ISI, and you listen to their takes on CNBC, now they're like, well, we don't think the super cycle is really going to happen in 2025. It's a 2026, 2027 story. Those are the analysts that are BS because they put out something and then they go against what they said because they shouldn't have put that out in the first place because they only put it out when the stock was up. Mariana has been right for the past 2 years. And every time she upgraded the stock, it was not because the stock went up. It was either after a really good earnings or after a really big contract. Case in point, she upgraded Palantir when it was basically flat at $20 after they got the Titan contract. And if you read that research report, it was because Titan issued a new era of software primes. So I don't think it's about the price going up. Dan Ives is more on the angle of like price going up, which I love Dan Ives, but when he puts out a price target, like he said Apple to 300 today, I take some issue with that not because I have an Apple position or I care. I'm just like, I don't know how you get that at all. And we'll talk about the Apple event, but I think it was disappointing on a lot of levels. But when Mariana, who has been historically bullish on Palantir, puts out a price target upgrade, that's when I take it seriously because obviously she understands the company at a deep level. She understands the numbers. She understands the bull case, the fundamentals, the narrative, all that stuff. And so, that's how I take it seriously. Now, look, $50 is not tomorrow. $50 price targets are always a year from now. So she's saying $50 in a year. I know a lot of people are struggling with the valuation right now. And I think I've been pretty fair to the bear case on the valuation. I have not said, no, all the bears are wrong, Palantir to $40, nothing like that. I have said pretty much every day since the stock was at 27, hey, it's an expensive stock. Now it's at a $78 billion valuation, trading at a price of sales of 36. It is still expensive at 34.60, but I'm also not going to not enjoy the run. Like, am I not allowed to enjoy when the stock goes up? I can also say, hey, it's getting a little overvalued here. It's getting a little expensive, but that doesn't mean, hey, sell your whole position, because I've never been that type of guy. If you want to sell your position, take profits, that's totally fine. I have no issue with that. But if you believe this is a long-term story, if it goes back to 25, okay, like so many fucking catalysts. All right, get excited to get your shares at 25 versus 35. So to me, it's a fun journey. Is it expensive right now? Of course, it's expensive. But we've spent, at this point, 2 years justifying why it's expensive. And I think it sums up in 3 things. CARP is one of those reasons. AI SaaS is another one of those reasons. And then the government moat. If anyone says, hey, how you justify Palantir's premium? Number 1 is CARP. Leadership matters. Number 2 is AI SaaS. The market wants an AI thematic. They want software, not just GPUs. Palantir is kind of the only player in town, in my opinion. And then third is that government business is not going anywhere. We just got a $500 million contract three months ago, and then a $200 million contract 2 months before that, like $700 million in 5 months. That's a moat that I don't think can't be denied. And also then it's just time to enjoy at that point, right? So I think I've been pretty fair to the bear case, but also, I mean, like when a stock goes up and it reaches some expectations that are beyond your dreams for, the period of time that it's going up, you enjoy it. I think you sit back, you enjoy the journey, you don't struggle too much, you don't worry that much about valuation. I'm not saying you have to buy it right now. I'm absolutely not advocating to buy. I 100% agree that it is expensive, and I've been saying, hey, it's been expensive for the past $8 as it ran up from 27 to 34. But that doesn't mean you can't enjoy the price action. I mean, same thing with NVIDIA, dude. When NVIDIA was running up this whole year, I'm sure plenty of people felt at 70, 80, 90, 100. It got expensive at 130. But if you weren't selling and if you believe in the long-term thesis, then you probably just enjoyed the run-up. And now it settles at 108. If you have an average that's significantly below that, you just hold on for the ride. And you see where it ends up taking you. All right. There we go. That's the update on Palantir. Fritz says it's expensive, perhaps, but is it overvalued? Yeah, I think that's a fair argument. There was a good article written by my friend Amir on Seeking Alpha that says Palantir is expensive, but not overvalued, implying that they can grow into the valuation. That's the way to really deduce this, to make it very simple, to not get super nerdy about it. Like, do you believe they can grow into the valuation? Do you think they can reaccelerate that growth to grow into the valuation? I think that's possible. Another thing that's really important, we looked at this chart yesterday. Companies that get into the S&P 500, about 2 months later, they fall on average by 15%. So they get an initial bump like Palantir, which is up about 20%, and then it falls by 15%, kind of gives all of that away after a couple months of inclusion. So, history is against Palantir in terms of being able to maintain this multiple going after the S&P 500. I get that. And yes, the price to sales right now is pretty ridiculous. But I also think it's one of those things where you enjoy if you are long. If you are worried about your short-term profits because it's a swing trade for you, then you take action on that, right? Then it's not that crazy of a decision to say, hey, it's a little bit overvalued right now, I'm going to take some profits. But if you're in this for the long term, I think the thing that gets exciting now is that on every dip, people get excited to buy. Barring a recession, if we somehow dip to like 27, 28, 25, 26 again, which I think is very possible, those are opportunities that longs, if the thesis has not changed, which I would imagine the thesis wouldn't change even if they have a crappy quarter over the next year, those would be exciting opportunities for me. I mean, I wouldn't be upset about that. So you enjoy the ride up. If you fall down and there's no fundamental reason why you fell down, that's that thesis breaking, then you just buy the dip. And I think that's my kind of philosophy on it. I don't stress about it too much, but I do think life is made up of moments. And yesterday that was a pretty sweet moment. It was a pretty sweet moment seeing that video by Carp. Final thing I'll say about this, and then I want to talk about Oracle because there's a lot to talk about Oracle. Some people are saying it's super expensive and 204 PE, etc. One thing I would change in terms of the mindset. I was talking about this with a friend last night. Is when someone says Palantir is expensive, ask yourself why. I think that's something we forget to do, right? We just assume irrational exuberance. That could be one of the arguments. But when you ask yourself why and you dive a little bit deeper and you realize how many people care about Carp running in a forest talking about what he's talking about, you see the equity analysts on the institutional side. So it's not just retail saying, hey, we think Palantir is exciting. You got Mariana from Bank of America saying it's exciting. You got people from Argus Research and when you look at both of those schools of thought converging along with the actual moat around Palantir, asking yourself why it's expensive versus just claiming it's expensive, I think is an important thought project, because you could still be right that the shares could fall because it's expensive, but at least it gives you more context to understand why it's expensive in the first place. Same thing with Amazon, why it was expensive for years. Same thing for Tesla, why it was expensive for years. Same thing with NVIDIA, why it was expensive for years. At the end of the day, stocks can be expensive. But if they're real companies, then I think they have, fundamental moats that justify them. Okay, cool. That's what we got on Palantir. Let's move on to Oracle. Folks, we've got to talk about Oracle. This was one of the most important earnings I think we got this entire cycle when it comes to AI. After Oracle, we'll do some macro stuff because we got a bunch of new macro things to discuss. We will have CPI tomorrow. So we'll discuss that at 8:20 tomorrow morning. I'll be live and see what's going on. And if we have a good CPI, hopefully we'll see how the market reacts to it. So Oracle's up 9% right now. Oracle's up basically $40 billion in market cap. Now, why is the market giving Oracle a $40 billion market cap? Well, let me just pull up their numbers. Oracle, I mean, I think this was one of the best earnings calls. I encourage everyone to listen to this earnings call because your boy Larry Ellison, who by the way owns 40% of Oracle. I didn't know he owns 40% of Oracle, but he owns 40% of Oracle. He really like put AI into context. So first of all, adjusted EPS up 17% year over year, revenue up 7% year over year. All their like segments revenue, cloud services, infrastructure, licenses, hardware, software, all of these were up double digits outside of hardware and service, which were down a little bit year over year. But the rest of the main ones that have the most margin, they were up 20 to 40% year over year. Full year 2025 outlook, remaining performance obligations, $99 billion, up 53% year over year. And a lot of that was driven via AI. They announced 2 contracts, one with AWS, another one with Google, bringing on the database services from AWS and GCP onto their Oracle Cloud. And Larry Ellison said, our multi-cloud strategy with AWS, Microsoft, and Google is driving growth. Soon, customers will be able to use the latest Oracle database technology within every hyperscaler's cloud. Okay, now let's talk about what they're saying when it comes to AI. So here's a quote from the earnings call itself on Oracle. Oracle CTO says, when asked about how they'll start monetizing AI, when are we going to start monetizing it? Well, all of Cerner is the monetization. Cerner is the healthcare company they paid $28 billion to buy a couple years ago. The fact that we can dramatically expand our health business is because it's based on AI. AI is just, I don't know how to describe it. I mean, the best way to describe it is it's not something you sell separately. It's the diagnostic system. It's the electric health record system. It's the pharmacy system, the prescription system, the user authentication, the login system. It's all AI. And I know people think it's a separate thing. And I hear a bunch of applications come and say, oh, we've now got AI agents we'll charge for separately. I mean, it's our applications are going to be primarily AI applications, everything. How do you charge separately for everything? So you've got Larry Ellison basically saying, hey, when it comes to monetizing AI, at least in healthcare, it's just selling the core service that is what's leading to the monetization, not coming up with some product that you can frame as an AI product. Actually, it's just the fact that AI is embedded within our core offerings in and of itself. Then on the ongoing AI model race, he says, the cost of training gets to be astronomical. When I talk about building gigawatt or multi-gigawatt data centers, I mean these AI models, these frontier models, GPT, Gemini, etc. The entry price for a real frontier model from someone who wants to compete in that area is about $100 billion. Let me repeat, about $100 billion. That's over the next 4 to 5 years for anyone who wants to play in that game. That's a lot of money, and it doesn't get easier. I think this is an ongoing battle for technical supremacy that will be fought by a handful of companies and maybe one nation state over the next 5 years. Hopefully that's America that wins, but probably more like 10 years. So this business is just growing larger and larger and larger. There's no slowdown or shift coming. Now, why am I talking about that? The reason I'm talking about that is because I think this gives us the bull case for NVIDIA. Now, I know we've discussed the bull case for NVIDIA plenty of times. However, Oracle's earnings is one of the first earnings I'm listening to, like one of the first real earnings I'm listening to that's talking about data centers, that's talking about AI, that's talking about the race for supremacy when it comes to models, that's saying it in such a like non-BS way that you start to like reconcile what it means and why it's so important. I'm not getting the same type of analysis from Microsoft or Google earnings because they have so many other different segment businesses that they're talking about in terms of search and Microsoft Office, etc. But with Oracle, that's operating in the data center space and the cloud infrastructure to support the training for AI clouds within their data centers, that's where I think you get a lot more context in terms of what Oracle is doing. Here's another quote posted by our boy Jose around Oracle as well to give a little bit more context here. He says, so we're in the middle of designing a data center that's north of the gigawatt that has, but we found the location, the power place we look at. They've already got a building permits for 3 nuclear reactors. These are the small modular nuclear reactors to power the data center. This is how crazy it's getting. This is what's going on. They are literally using nuclear reactors to power these data centers because that's how big these data centers are becoming, because that's how much training is happening for AI. Now, this also affects Palantir. If there's this much training for these foundation models, none of the training matters, none of the GPUs matters, none of the models matter, unless there's a software use case. And that's another reason for everyone who's saying Palantir is super, super expensive. We can't imagine the valuation right now. I get it. I'm sympathetic to that. But if you're the street, what are you going to do when you realize that it costs $3 billion, first of all, to even start a real estate project for a data center? And then it costs tens and tens of billions, and as Larry Ellison was saying, hundreds of billions to do the training. All of that money needs an ROI, and all of that ROI is not in the hardware. Like, it's not in the literal GPU. It's in the software use cases of that GPU. That's why everyone was hoping Apple would come up with a really good use case yesterday. In my opinion, Apple failed to do that. We'll talk about that in a second. But that's where the enterprise value, which I think is probably a TAM of, at this point, a couple trillion, is going to be unlocked. Palantir is not going to get all of it. But right now, the market's pricing Palantir as if they're going to get a lot of it. And that's why I think Palantir is getting the premium as well. So Oracle earnings, I highly suggest everyone listen to that call, even if you're not going to buy the stock. That company and that earnings call kind of solidifies a little bit more of the NVIDIA bull case. I mean, it made me want to buy some more NVIDIA today, just in terms of listening to the scale of what's going to happen. And it solidifies the use case for GPUs when it comes to training, which to me, again, solidifies Palantir's moat in terms of what they're going to be doing with their software TAM over the next few years. So there you go. That's what we got in the context of Oracle. Let me know in the chat if you own Oracle. I don't know if it's a buy right here at 150. It's up 40% year to date. I probably would personally avoid buying it. I don't know about the fundamentals that much, but Oracle has always been a big player. Even if, not everyone knows exactly what they do. And I think, and even myself, this was the first earnings call I really listened to, and I tried to dive deep into what Larry Ellison was saying. And it just, given, the research I've done on data centers over the past couple of months, it makes a lot of sense how it's coming together. Their RPO going up 50% year over year. That means that there's a ton of demand by some of the leading AI model companies like OpenAI, which means just another example that AI probably is not going anywhere yet. Okay, cool. That's what we got for Oracle. I figure by buying Palantir, you get Oracle in a roundabout way. Yeah, because of their partnership. And to an extent, I think about buying Palantir as you get access to software AI. And some people want hardware AI, which is why they're in the semis. Some people want hyperscaler AI, which is why they're in the Max 7. I think if you want software AI, you get Palantir. The beautiful thing about Palantir, though, is just that there's so many industries that their software can be applied to, like literally an infinite amount of industries that could use this stuff, which is why I think we're seeing the growth. And so that's why, if it's a decision between buying Oracle at 150 or Palantir at 34, I'd still pick Palantir at 34, just because I do see a broader trajectory for Palantir over the long term. Now, again, I will say this again, because I don't want people to say I'm not saying it. I get the valuation is up there at $77 billion. I get that paying the 36 times price to sales is crazy. I understand that. I'm not saying that you won't get better entry prices than 34.86. That could very well happen. It could go down today. They could pump today. Anything could happen there. But again, asking yourself why it's getting that premium is very important. And I think that's a fair point of analysis. Like, this isn't GameStop that goes to 50 and everyone's like, oh, GameStop deserves to be at 50 because it's GameStop. It's like, no, like we understand. We've been talking about valuations for years now on Palantir Weekly. We understand that valuations can get stretched, and sometimes you have to take a step back and kind of look at how it plays out. But also, you have to ask yourself if there's something deep, if this is a truly generational company, like something like different is baked in this company's culture than every other company, then it begs the question of just trying to figure out why are they getting a premium, and if they were to fall, does that make sense to take an advantage of that opportunity given the market's historical premium for Palantir? That's what we got with Palantir and Oracle. Raul Ramos says, I join your live every morning. I'm a newbie just learning. Much appreciated, Raul. Thank you for being here. I got a lot of messages from people yesterday on Twitter. I actually got someone who used to work at ARC messaged me on Twitter. He doesn't work at ARC anymore. And he was like, dude, I love the show. I watch it every morning. And I was like, hey, did you listen to today's show? And he was like, yeah, only the first 40 minutes. I was like, okay, because in the last 40 minutes, I completely shitted on ARC for Palantir. It was like, it's okay. I shit on them as well. So thank you for the people that are reaching out. If you want to reach out, just send me a DM on Twitter. I see all the DMs and I'm really appreciative, man. It is an exciting journey. Obviously, Palantir is starting to ramp up. And so I know a lot of people are discovering the channel, but it's really, really fun. And thank you guys for coming back every day and hopefully getting some good value from the show. Okay, I think let's talk a little bit about Apple. Let's talk a little bit about Apple. So I'm going to put a poll in the chat right now. And the poll in the chat, by the way, thank you for everyone who's giving me compliments on the shirt. This is one of the new shirts I bought from Macy's. It's Levi's brand. I like the collar on it. I was expecting the Where's Waldo comments. I only saw 2 of them. So, I was expecting like 50 of them. So the fact that it was only 2 is actually pretty impressive. It means you guys are starting to not bully me as much, but I appreciate the compliments on the shirt. Okay. Apple event, bullish or bearish? That is the question. And bullish or bearish basically means, do you think this iPhone is actually something you're going to upgrade to when it comes to AI? Woody Trades, thank you for the $20 super chat. If I use math as a metaphor, these trained LLMs are like a mathematical proof or equation. You can solve cute book problems, but for real life problems, you need to tie multiple rules together to solve them. That's ontology. Woody, you are 1 trillion% correct. This is exactly what Carp's been saying, right? These LLMs can give you poetry, but to actually solve real life problems, to have real life use cases, for example, to actually solve scheduling issues in a hospital, to get an ROI, to have more efficient nursing and staffing, you need to connect the LLM, which is the computational infrastructure that provides the AI agents essentially to automatically do things, to the ontology. And this is what Carp's been saying. It's like there's chips and ontology. Chips is the hardware stuff. Ontology is the software. If the chips are for the software and Palantir is the only one that's got the damn software, aka the ontology, not just the model itself, then that's where the moat is. And that's where you can really see some exponential scale ultimately in the business. Okay, what do we see in the poll? So 69% of you are bearish, 31% of you are bullish. All right, so let's do the Apple segment right now. There's a couple of things that we've got going on with Apple. First of all, I don't know if you guys saw the news this morning, but 3 things happened, okay? Well, 2 main things, and then we'll talk about price targets. Number 1, Huawei unveiled a trifold phone, which is a phone that has 3 screens to it. I don't know who the hell is buying that, but apparently 3 million people in China pre-ordered it. The reason why Apple is struggling a little bit post this event, and I don't think the stock necessarily is going to fall 10, 15% or something just because the event was a nothing burger, because at this point, the streets kind of bought into this AI supercycle story. But the reason they're struggling right now is because that Huawei phone is making investors feel that Apple's going to have serious competition for the iPhone 16 in China. So that's one of the reasons you're seeing it down 1% after the event. Number 2, and here's the big thing. I think a lot of people might not know about this, but I saw this morning and I was like, oh boy, this kind of sucks. There was an analyst trying to justify it on CNBC. I was like, dude, this is not, you can't justify this. It's going to be tough to hear. Apple has been in a court lawsuit with the EU since 2016, when the EU accused them of not paying $14 billion of back taxes to Ireland. Why Ireland? Because Apple stores and pretty much every corporation stores a crap ton of cash in Ireland, because Ireland has some like favorable tax laws to US corporations. They lost. They have to pay $14.4 billion to Ireland, meaning I think Apple has like $150 billion in cash or something. They have to take out $14.4 billion of that cash that could have been buying back stock. They buy back about $7 billion of stock every month, and they have to give it to Ireland. So shout out to Dublin and Ireland. You guys are going to get some nice tax money. But unfortunately, Apple's losing $14 billion. And there's no way that's 14% of their free cash flow. You could argue, because their free cash flow is about $100 billion. You could argue like, well, they have so much cash, they can justify it. I don't think it's going to necessarily hurt the stock that much, but to give up $14 billion for taxes versus buying back stock or, investing in growth, that's a tough situation. And then finally, what we got on Apple right here, Needham said, hey, we're keeping our price target of $260. And I'm reading Needham's equity report because it was pretty much in line with what everyone else said. They said, and I quote, we did not see any compelling use case shown by Apple yesterday that would get consumers to buy an iPhone 16. That is an equity firm on Wall Street saying, hey, we're keeping our price target, but we just don't understand why people would buy the iPhone. That is not a good situation, folks. And that's why I'm asking in the chat, am I alone with this? Did you think the Apple event was bullish or bearish? We got 70% bearish, 30% bullish. I think this iPhone, this new iPhone that they introduced, it is just, Robinhood just put out a note. Interesting. Wow. Interesting that they're doing this. I logged on Twitter and I saw this. Robinhood just said, hey, we're giving you 1% to transfer from now until October. Wow. All right. So for everyone who is waiting, I'm about to text my boy Davis right now. He's been waiting for this 1% transfer to be. All right. If you've got your money stuck in Schwab, if you have $1 million in Schwab, you want to get 10,000 just for coming to Robinhood. There you go. It's live right now. Okay, cool. There's some breaking news right there. You know why? It's probably because they're seeing deposits not go up that much in September. I have a lot of analysis on Robinhood. I did last night. They had their metrics, good numbers, not like crazy numbers, but still phenomenal numbers. We'll do some analysis after the bell. But it seems like September deposits are probably slowing down a little bit, which is actually makes sense because seasonally September slows down, and that's why they're bringing that back. So that's probably why Robinhood is doing that. But again, in terms of Apple, I saw no reason to upgrade the iPhone. I think a lot of people saw no reason to upgrade the iPhone, and I think the street is kind of confused. Now, you have some analysts like Wedbush, for example. Dan Ives says, Apple Intelligence is the launching pad for the consumer AI revolution. We expect the iPhone 16 launch to be the most successful in Apple's history, with a major upgrade cycle over the next 12 to 18 months, driving shares higher towards a $4 trillion market cap. I love Dan Ives, but I don't know how you can see that event and say, we expect the iPhone 16 launch to be the most successful in Apple's history with a major upgrade cycle. If the upgrade cycles is because everyone has an iPhone 12 and they want to get the iPhone 16, then I kind of get it. If the argument is Apple showed something last night that was so huge, so incredible, so amazing that everyone's going to upgrade to this iPhone, I think Dan Ives is wrong on this. I mean, and I love Dan Ives. I think he's a smart guy, but I don't see the use case. I saw text summaries. I saw email summaries. I saw like emojis that are a little bit cooler than before. I did not see the real use case. Now, I'm sympathetic to the fact that the use cases are yet to be discovered. It's a mystery. We're going to see what the use cases turn out to be. But I was expecting Apple to come out and say, hey, you can like book a flight through Siri, and all your intelligence via Apple's proprietary infrastructure, along with your data that Apple has all the access to, would be able to like contextualize all of it and then immediately like book a flight for you, and you not have to worry about going through the United app or anything, or checking prices, anything like that. There was no use case like that, dude. There was, hey, if you're recording a meeting, it gives you a summary. And I'm like, dude, no one even likes going to their meeting. Has anyone actually like, do you guys read your meeting summaries? For those that are in corporate America, are you like actively like taking your notes around the meeting summary? I mean, some of you probably are because you're good workers, but like who the fuck goes into a meeting and then like types up notes and then like looks at the summary at late at night before they go to bed to like be prepared for the next day? I don't know. Maybe some of you guys do it. I don't even think most C-suites do that shit, dude. Like meeting summaries. Are you serious? That's what we're talking about here. So I'm not trying to be bearish Apple, but I did not see a valuation argument to justify the upgrade in terms of AI. So let's read a couple more of them. Again, this is what the street is saying. Bernstein, Apple's product announcements were more evolutionary than revolutionary. Again, they're all acknowledging we didn't see anything important with a somewhat underwhelming demo of Apple Intelligence. So this is not just the mitt picking on Apple. This is the entire street realizing, hey, this is not that good. While pricing remains stable, the slow AI rollout may push consumer upgrades to the iPhone 17. This is the stuff I have a problem with, because everyone on the street upgraded Apple after WWDC, claiming AI upgrade cycle. Now they're like, hey, it's going to take till 2026. Maybe the iPhone 17 is going to create the upgrade cycle. And I'm getting a little worried, guys, that this is going to turn into Vision Pro. And Vision Pro was obviously a flop. I think everyone can acknowledge that. If the AI iPhone turns into Vision Pro, that's not good. Now, I don't have a short position against Apple. I don't like that this is happening because I'm an AI bull. And to be an AI bull, you need a consumer AI use case. So I wanted Apple to have this massive AI consumer use case tomorrow, so I could be like, yep, the AI thematic continues to go forward. Now you've got the consumer side of it and everything's working out. I did not get that yesterday, just to be honest. And so this is like not good for Apple. I don't know what's going to happen to the stock. Maybe people just buy the stock anyway, but all the equity research reports today came and said there's really no fundamental reason to upgrade. And that's sad, because for the past 5 months, all I've been hearing is that you're going to upgrade. That's why when Dan Ives upgraded to 300, it made no sense to me. I'm like, what did he see that was a reason to upgrade? Because if you're telling me it's meeting summaries, I'm like, I just don't know if that's the best reason. So we're going to see what happens. But right now, Apple's in a little bit of a tough situation, and then having to pay $14 billion is not good. By the way, Google also got charged a $3 billion fee by the EU. They're up 1%, probably because they were down about 1.3% yesterday, so getting a little recovery. But they have to pay $3 billion because they manipulated prices on Google Shopping by using competitor data that they shouldn't have had, because they're Google and they have the world's data. And the EU said, hey, you got to pay up $3 billion. $3 billion is a smaller parking ticket than the $14 billion that Apple has to pay. But nonetheless, big tech is really starting to get hit with some of these fines from the EU. And we're going to have to see how that affects their prices going into the latter half of the year. All right, folks, all eyes on Palantir 2 days after S&P 500 inclusion. Let's see how the street ultimately reacts to it. upgrade to $50 today by Bank of America. Thank you, everybody, for being here and spending your mornings with me. 9:30 a.m. The stock market is now open. Are we going to 35 as soon as the market opens, dude? We're at 34.90. Are we going to 35 as soon as the fucking market opens, bro? Are we actually about to go to 35, bro? Are we? I mean, like, dude, it's a 34.90. Dude, oh my God. Dude, it just busted through. All right, it came right down below 35. It went to 35.14, then came right back down. Where are we at? 35.20. Oh, I think we're going to 35, folks. There's too much momentum. I think we're going to 35. There is so much momentum right now. 6 million shares. Most of it is buy side pressure, up 1%. I think we're going to 35. I think we're already at a new 52-week high. I think we're going to 35. We're not staying at 34.97 unless we either fall, 30, 40 cents from here and normalize in the 34.50s. I think we push higher. Holy freaking crap. Wow. While I was ringing the bell, we were busting through 35, dude. I think we're going to 35. Like, here it is. The momentum's here. I mean, as long as the sellers are not sitting at 35, and there's no walls at 35, it's a very tight and narrow bid-ask spread. So it doesn't look like 35 is some like boogeyman resistance level that we're looking at. It looks like it's possible to break through it and then hold on to it a little bit. Okay, selling off a little bit right now, but we did bust through it for a few seconds at 35.20. So there were plenty of buyers. Basically, there were people that had limits orders ready to go at 34.90 because I guess a lot of people are anticipating a run to 35, 36, 37, whatever it may be. And so people wanted to get their shares immediately. 34.86 right now, 35.20, 34.95. Let's see if we break it right here. We've got to sustain it once we break it to keep that momentum going up. But let's see if we get there. All right, we'll go back to Palantir in a second. NVIDIA is up 2.3% on the day. Google's up 1.3%. Oracle, 10.6% on the day. Wow. Oracle now all-time highs. Tesla, 2.5%. Tesla's in the green. 10/10 event hopefully is coming very soon for Tesla. Bitcoin, 57,000. S&P 500 up 0.4% of the day. We still have some macro stuff we'll talk about. And a little bit, the NASDAQ up another 1% on the day. Berkshire Hathaway is down. Market is selling off Coca-Cola and they're buying NVIDIA. Celsius up 1%. IWM, small caps are down. ELF getting a little bit of a rebound after a nasty 7% down day yesterday. CrowdStrike up about 1% at 249. PayPal, 69.41. SoFi down about 0.64%. Did anyone listen to Noto at the Goldman Sachs conference? Robin is going to be on the Goldman Sachs conference today at 5:15. I'll give you guys the summary of those, of what he talks about tomorrow morning. I listened to a little bit about what Noto said, and I have some thoughts on it. I thought it was interesting, but curious if anyone got a chance to listen to it. HIMS is up a little bit right now, basically flat on the day. Coca-Cola up a little bit. Visa is up. Visa, Coca-Cola basically flat again. Some of those Berkshire stocks. Disney is down 0.21%. Dix is down about 1%. AMD's up 0.85. Let's go to the Max 7. We've got Apple, that's down 1%. We've got Microsoft up 2%. Meta up 2%. By the way, Meta just got upgraded to $600 they got upgraded to $600 at D.A. Davidson, who initiated a buy target. So you got Meta at $600 at D.A. Davidson's by the end of the year. Google, 151. Amazon, 179. NVIDIA, 108. Wow, NVIDIA up 2%. I think it's pumping on the Oracle news, to be honest. Palantir now, 34.64, chilling out a little bit at that $34 level. Tesla right here at 222. Let's look at the semis. Micron's up. Dell is flat. ARM is up 2%. Marvell up 0.71. Apple's iPhone 16 is being designed by the ARM CPUs. So that is bullish for ARM. If Apple can sell these 100 million devices that everyone is expecting them to sell, if not, then TSM and ARM really don't get that much of a boost. ASML is down a little bit. SMCI is now flat on the day. NVIDIA falling a little bit right there, but still up 2%. AMD up about 1% on the day. Let's go back to Palantir. Are we chilling out a little bit or are we running? Palantir is 34.54. All right, we're chilling out a little bit. Dude, we hit 35 though. I mean, that was a quick 35. We did hit 35, but it was super quick. So we had some people that bought literally at that 35.20 level, and now we're taking a little bit of a hit. Look, if we fall back to 33, I don't think anyone can complain, dude. Like at this point, no one can complain. It's an incredible year. Palantir's up more than 100% year to date. So now it's just a question of holding on to these levels versus necessarily giving it up. Robinhood down about 1.1% of the day. Bitcoin starting to fall a little bit right here from 57,000 to 56.7. S&P at 548. Yeah, you got some red candles immediately. So we got red candles basically at 9:35. At 9:30 we had green, and about 5 minutes later we're seeing the market sell off. Wow, Berkshire just turned green. We were growth in the morning, then value, growth in the morning, selling off value. Now 5 minutes later we are going back into value. We'll see if that rotation continues to happen. I know it's happening within the first 5 minutes, but you're seeing a little bit of volatile action from there on both levels. SMH is red, makes sense. Money's transitioning a little bit. Adobe's up a little bit, 575. DocuSign at 55, that's down 1%. Where is Oracle? Palantir is now red on the day. Oracle still up 11%. Looks like the street's rotating some of their money in other AI plays into Oracle as well. Broadcom, that fell 12% last week. Broadcom up 1.3%, getting a little bit of love. Fell to a bottom of 137, now at 142. It was at 172 at the top of this year. Now at 142 right now. Is Siri a reverse stock split? What is that? Well, no, Siri has not had a reverse split from my understanding. Siri is Warren Buffett has a big position in Siri, but I think he's doing it for a acquisition play right now. You guys are did they? Oh no, you guys are right. It's up 800% today. Yeah, I think they did a reverse split. You guys are right. Yeah, they have to do a reverse. Wait, that's weird, dude. They did? Yeah, they did. They did 5 hours ago. They did a reverse split. Okay. I don't know why Weeble's saying it's up 800%. It's not actually up 800%. Yeah. So they did a reverse split today. But Warren Buffett, I think, is owning them for an acquisition play. So that's why he has a big position in the company. I think it's like worth 10, 15 billion. Palantir, now we're falling down 1%. All right. You expected this. Probably we're going to get some sellers at these elevated prices. We'll see if that can reverse or if that continues. Google right here, 150. They're green. Nvidia now falling, even though it's green for the day. So we're seeing that sell off. That usually happens at 10:30, happening at 9:30. Tesla going green, though. Tesla holding on. Tesla now up 3%. It was up 2%. But now it's up as well. Series down 10% on the day. Okay, thank you for that, Will. So Series actually down 10% on the day, even though it says that it's up 800% on the day. Okay, in terms of SoFi, so I listened to the thing last night, and I think it was good by Noto. SoFi is down 1.62%. One thing that was a little confusing to me, though, is Noto said, hey, we're coming out with this new subscription program called SoFi Plus, and that's going to allow you to get like exclusive access to IPOs and all this like fancy shit. And I don't know, dude. I just wasn't as convinced. It basically sounds like they're trying to do Robinhood Gold. And I'm not saying there isn't another opportunity for a subscription platform, especially if you're already in the SoFi ecosystem. I'm sure they can get good adoption on it. But I don't know what you're really going to get by subscribing to SoFi Plus. I mean, maybe you'll get some features here and there, but it seems like in 2025, their big growth story is, hey, we're going to, tap into our member growth and unveil this massive like subscription platform that gets people to come back. Is it going to be $5 a month? I mean, he even started talking about, it's like Amazon Prime. And I'm like, dude, you just like, why are you're jacking Vlad's swag here? Like you're talking like how Vlad was talking to me during our podcast when he literally was comparing it to the Costco hot dog model and Amazon Prime. And it's like, it just wasn't very convincing to me. He's like, oh, you'll be able to invest in alternative assets. I'm like, I pay $5 a month to invest in like a piece of art that I don't actually own. Like, I don't know. It wasn't really convincing. So the conference was good from the lending perspective in terms of that growth that he's talking about, but from the actual go-to-market on the technology platform and on the consumer side of the business was not really that convinced. But granted, SoFi does have 8 million members. I imagine some percentage of them would subscribe. Robinhood has 24 million accounts. They have 2 million gold members. I don't know out of 8 million people how many people would really subscribe to that, but that could be an additional tailwind for revenue and potentially beat some of those earning estimates that the street has as well. Disney is flat on the day. Verizon is red. American Express is red. Coca-Cola is up. Visa's up. United Health is up. So defensives are up. Berkshire and value is up. And then growth is starting to go down. Oil is tanking, folks. Look at oil, bro. This should actually get us into a macro discussion now that we're talking about oil. So let's go to that. Oil's at $67.94, down 1.12% on the day. Look, I think CPI is going to be pretty low. So we talked to Trueflation yesterday, Trueflation CEO. If any of you guys didn't catch the interview, it's on the last chapter of the Market Open yesterday. He sent me one of Trueflation's equity reports, like research reports on not equity report, but research reports on inflation. That is like for their big clients. And Trueflation is thinking that we're going to put out 2.6% on Wednesday. Some of the banks say 2.7, 2.8%. He's saying, or at least the report is saying, look, it looks like it's going to come in at 2.6%. instead. I think if we get a 2.6% read on inflation, markets can do well and we can get some momentum. Now we got to get that 2.6%, not 2.7, which would be a substantial decline down from 2.9. I mean, to go from 2.9 to 2.6, we are very close to 2.5. It's actually the exact rating is 2.56. It'll be rounded up to 2.6, but it does look like we're going to come in definitively below 2.7%. That's going to be important. And I think that's going to be important for a variety of different things happening in the macro, but obviously that's going to lead to the Fed wondering, hey, is it time to really cut rates? I still think we're going to get 25 as much as I want 50. Palantir right here now at 34.22. I think 50 wouldn't be inappropriate. Nvidia now going not red, but it's starting to fall off a little bit more. Apple, wow, down 1.64. So Apple is down. I think 50 would be starting the cycle in an aggressive way. And I don't think that's admitting defeat, but I think the market would think that's admitting defeat. So unfortunately, we're probably going to get 25. But as long as the market prices out the recession and 25 is the beginning of a deep rate cutting cycle, Goldman Sachs came out this morning and they said, hey, we're going to get 125 bips off of the Fed fund rate by the rest of this year. So Goldman Sachs is like, hey, inflation is going to, I think their main logic was inflation versus the unemployment market, even though the labor market is cooling is a reason for why you would cut rates. But their argument is, hey, CPI is going to go down so dramatically, like maybe to 2.2% by the end of December, that it will make zero sense even to have 4% Fed funds rates, right? Or sorry, 4.5% Fed funds rate. So they're assuming we're going to get a substantial decline to about 475 bips by the end of the year. And if that's the case, I think equities go crazy. If we escape a recession, I think equities go crazy. I think SoFi goes crazy. I think Palantir gets a little bit of a benefit from that, even if the valuation's stretched. I think Robinhood goes crazy on that. So I think Bitcoin definitely goes crazy. We get some more liquidity entering into Bitcoin. The question is, are we going to get those rate cuts? And then the question also is, how's the market going to presume the winner of the election and what it means for the markets? We do have the debate tonight. I will not be streaming it, but that's going to be a very important thing for the markets. We're going to see how futures react after the debate. If Trump wins, do futures like that? Because a lot of market analysts are not liking his whole tariffs policies. But if Kamala wins, do markets like that because they hate her tax her tax hikes? I was reading another report yesterday. So, I told you guys yesterday that I was reading a report that if Kamala wins and she raises corporate tax rates to 28%, the market has to fall on 7% by average, because right now it's at 21%. So earnings would get hit by at least 7%. So the stocks in the market fall by 7%. I kind of thought that analysis didn't make sense. I read another article this morning and it pretty much said the same thing, that, hey, like if Kamala wins, you've got to cut some of these EPS estimates because companies have to pay more in taxes. And so there is an argument that if Kamala wins the day after, we're going to see the stock market down about 5% just based on that tax policy. But then again, if Trump wins, maybe the market's also upset about that. So we're going to see how that plays out, but that is going to be very important for a lot of stocks at the end of the day. SoFi right here, 695, down 1.98%. Palantir still holding 34 strong, down 1%, but they are holding 34. Apple getting hammered, down 2% at 216. Again, Apple, if you buy it at 216, you're still paying a 33 PE for a company that was expected to grow massively in this iPhone 16 cycle. And now every analyst came out today and said, hey, maybe they're not going to grow that much. So that is kind of the scary part of Apple right now. And that's why they're down about 2% right here. What's going on with Sirius XM? They're not up 832%. They did a reverse split. So for all your brokerages saying Sirius up 832%, they did a reverse split. The brokerages are just being weird right now. But that's why they're up. They're actually down about 10% right now on the day. SoFi management said that they would keep their API rate higher on savings accounts higher for longer, which turned out to not be true. Well, yeah, they declined it from 4.6 to 4.5. So it did come down a little bit. I wonder, the other high yield savings accounts like Robinhood, Capital One, how long they're going to keep their saving rates at their levels after the Fed cuts by 25 bips. Wow, Oracle's up 13%. But the real thing for SoFi is going to be, what is the juice you get for this $5 a month subscription? I mean, if you're going to pay $5 a month, you got to make it worth it. And to make it worth it, you got to be able to do something like this. I put in $1,500 into Robinhood yesterday, and I got $15 for putting in $1,500. Like, this experience, dude, this experience is just phenomenal. Every single time, it's just an incredible experience. And for $5 a month to get 1% on your money without even investing it, just because Robinhood has figured out the unit economics to make 2% of the money so they can afford to give you 1%, that is where the subscription becomes valuable. So I'm going to be curious what SoFi can introduce. This is the first time I heard Noto says, hey, we have this new subscription program. And I'm just curious how much value they're going to bake into it. to get people to subscribe at the end of the day. The other problem around my fears on their conversions is because they have 8 million members, but they never say how many are active. At least on Robinhood, we know about 11 million are active per month out of the 24 million accounts. So you could say 10 million are dormant. They just like buy and hold and they never really like care about their Robinhood account. And there's 11 million that actually really care. And so they have a 2 million conversion off those 24 million accounts that are gold subscribers. We don't know how many people actually check their SoFi account, even though they have 8 million accounts. So how many people are going to, if it's only like 1 million people or 2 million people, how many are then really incentivized to then upgrade to SoFi Plus? Because I would imagine you would have to be a monthly active user at least to get interested in buying the subscription to their program. So those are the questions I have. Not bearish on it, but I want more clarity on it. And hopefully in the next couple months, they give us more clarity on what that subscription program looks like. NVIDIA right here at 107, Google at 151, Robinhood taking a hit right here, down 2.6%, S&P 500 at 548, QQQ at 458, and then Tesla right here at 221. We did get an upgrade on Tesla to 295. Let me pull that up real quick. That was a top pick at, I believe, Deutsche Bank. I think it was Deutsche Bank. By the way, Goldman Sachs upgraded AMD to 175. They upgraded Amazon to 230. And then Deutsche Bank was 295. Okay, so Deutsche Bank said, at the core, we do not see Tesla as an automaker, but rather a technology platform attempting to reshape multiple industries deserving of a unique type of valuation framework. Tesla structurally already has a big lead in EVs, especially as it relates to scale and cost, and commands outsized brand value globally. Near-term automotive deliveries and margins have indeed been softer, but we view this as a temporary pain point ahead of new models and refreshes coming in the pipeline. Long-term, Tesla is an emerging leader in an autonomous robotaxi and humanoid robots, Optimus, which represents some of the most clear and lucrative applications of end-to-end AI. I think they're correct on this. Furthermore, the energy storage business is already undergoing a major growth and margin inflection, set to generate $13 billion in sales in 2025, $295 price target on Tesla, probably why the stock is up here at 2.3% on the day. Look, I agree. My goal is to, build out a heavier Tesla position next year based on what happens in 2024. I think at the end of the day, the energy business is a reason to go long. Optimus is a reason to go long. FSD, once it officially becomes live, is probably a reason to go long. So, I think Tesla is the actual application of AI in the real world. In a world where everyone's searching for use cases of AI, Tesla has 3 of them that are pretty big. The question is just going to be, when they can start executing at scale. Tesla right here up 3% right now, which is not bad. Matt says, just confirmed an account transfer into Robinhood thanks to the extended match program announcement. Yeah, again, if you missed it, Robinhood just came out this morning. They said, hey, you're getting 1% on your money if you transfer to Robinhood. So I like it. I think it makes a lot of sense. And it's probably because they're seeing deposits are a little bit weaker in September, which historically has happened for Robinhood. But probably trying to boost up those deposits, and they have the unit economics where they can afford to do that. We'll talk more about Robinhood in a little bit because I ran some numbers last night, but we'll get through a couple of other headlines and then we'll go a little bit more into Robinhood. Myra says, FSD is amazing. I'm loving it. It's driving me everywhere with no interventions. Yeah, a lot of people are saying the same thing. They are seeing FSD start to ramp up at a different level. I'm still confused if we're having the 10-10 event. Oracle up 14% because, it's literally a month away. Today's September 10th, and we have no official announcement by Tesla, press release, invites, anything. So I hope we still have that 10-10 event. We'll see what happens. But if we do, I think they're going to show off FSD and Cybercab and do it in a very, very exciting way. Elon did do an interview on the All In podcast. There were some good nuggets in that interview. I'm not finished watching it, but for those that want to check that out, he revealed some very interesting things yesterday about Tesla and SpaceX and free speech and all this good stuff. So if you want to get a little bit more on Elon, I think that's a good interview to watch as well. Piper Sandler on Google, $200 price target. Here's what they had to say. After consulting with an antitrust lawyer regarding the DOJ litigation, we believe the government has successfully argued the merits in 2 of 3 cases, but time is on Google's side. So they're saying, hey, Google's going to lose, but they can still figure this out. The search trial, the most significant, has a lengthy remedies and appeals process ahead with the potential of rapid new administration technological advances in the interim. We characterize the judge's ruling as measured, implying a breakup is unlikely. While there is near-term headline risk, we see this as priced in and view the cases as a distraction. Long-term investors should use recent weakness to accumulate shares. So let's put another poll in the chat because now I'm curious on this. By the way, 70% of you said bearish on Apple after we got about 1,000 votes. So it seems like people are pretty bearish on this Apple event. And the question is, do you buy Google right now? At one point, it was trading at 17 times next year's earnings. I think yesterday 17.5. Right now it is at 19.5, below 150. Even I'm tempted to get excited into it, but I don't know fully yet. I still think there's some things to work around. I do think Google generates so much free cash flow that it's kind of stupid to even have this debate on if it's a buy right now. But the DOJ thing is a little concerning, given, like if they actually do get broken up, which I don't think they will, but what they're going to have to do to settle to not get broken up, what, remedies they're going to have to make. And then again, the real reason I'm just getting a little hesitant is because I'm using Perplexity a lot more. And I know that's not the best reason to say that's probably a horrible reason to say Google's not a buy, but I'm just using it less personally. And so I imagine other people are feeling that as well. And I think, that's the part that we have to reconcile. The cloud business is growing phenomenally though. And that cloud business, I think independently is worth looking at it at 19 times earnings. Like the cloud business itself is amazing. But the overall search business, while I don't think it's in jeopardy, I do think there are going to be some challenges coming. Now, granted, I think Google can navigate those challenges. It's just going to be a question of, how they choose to do that. I use Gemini every day. Yeah, you've got other people that are using Gemini every day, right? So my experience with Perplexity might be different from people that are using Google AI products. And that's something I have to look into, because if a lot of people are still using Google AI, even if they're not literally, using other different types of products, then that's still a reasonable argument for why Google should be gaining some momentum. Why are stocks going red? Well, it's September and we're only allowed one really fun day, which was yesterday. And, we get one good day after a lot of pain, and now we're getting back to the pain, baby. It's still September. This is why Palantir's performance this month this week has been amazing, because this is supposed to be a horrible month. And you got Palantir that's up more than 100%. This month, I think it's up about 17%. So it's like it's having one of the best Septembers, I think, in the history of the stock market. The question is just, can we maintain that momentum after the rate cut and after the CPI report, FOMC meeting, all of that stuff. September 18th, that's going to be the day the Fed decides if we cut. I think it's baked in that we're going to get 25 bips. The question is just going to be how the market interprets that after we get those 25 bips. Out of the Max 7, Google and Amazon seem the most tempting right now. I agree. They seem the most tempting. Tesla right here. Is Tesla going down? No, Tesla's still up 4%. Tesla up 3.6. Tesla's going green in the face of everything going red. FinTech is red today. SaaS is turning a little red. Where's the SaaS companies? Yeah, some of them are green, some of them red. Adobe's green. Cloudflare is down. Zscaler's down. Twilio's down. The other ones are slightly green. Oracle is the most green today. Salesforce up a little bit right now. Snowflake getting a little bit of love. Datadog up a little bit. But the rest of these guys are experiencing a little bit of red. Kind of a mixed market. I mean, S&P, I think, is still green. Yeah, it's green by 1/3%, which is nice. It was green by almost 1.5% yesterday. But the broader market taking a little bit of a cool down after yesterday. Okay, let's do a quick 5 minutes on Robinhood. So I'm not going to go super in depth on it, but the arguments or the metrics yesterday were pretty good. They were a little bit below my expectations, but I had to think about like what my expectations were and if they were reasonable. And my expectations were not that reasonable when you look at the history of it. The reason they're not that reasonable is because I'm expecting Robinhood to do monster numbers every single month. And these were really good numbers. They weren't literally monster numbers, but they were still pretty phenomenal numbers when you put it into context. So net deposits is the part I was the most surprised by. I thought we would get to 4 billion. We came in at 3.3. Again, I have to remind myself, holy crap, they did 3 billion in 30 days. SoFi does 3 billion in one quarter. They're doing 3 billion in a month, right? Just to put into context in terms of deposits into these types of companies. So this is pretty exceptional. I also had to remember, wait a second, August is when people go on vacation. It's the summertime. I talked to a couple people yesterday. They take their money out of their brokerage platforms. They have to spend, yada, yada. They have expenses in life. So I think August historically is a month where we see a little bit of downturn. Same thing with September. So, and that'll matter in a second because September tends to be Robinhood's worst month based on all the analysis I did last night. Funded accounts, they added 60,000. That was great. AUC went down a little bit because equity valuations came down in August. And then cash sweep, this was actually amazing. This went up by $1 billion, 21.8 billion to 22.8 billion. So a lot of people opted for that 5% APY. Equity volumes basically the same. It's down about 8 billion from 104 to 96, but still up 12% from Q2. Crypto somehow surprised. I thought crypto would go down to 3 billion because it was horrible last month, but we were up by 5.4 billion versus 5.3. Margin, this is going to matter in terms of Robinhood beating on estimates in Q3. That went up by 100 million. And then options, although it went down from 160 to 146, 146 is up 37% year over year, and it's up 11% compared to all the months in Q2. And that's really important for Q3 because options has the highest take rate for Robinhood as well. So a very, very, very good month, but not a phenomenal, crazy month like July. And that kind of makes sense because July is July. And, July was kind of like one of the best months of the year for the broader stock market. Now, in terms of what this means for Q3, I'll do a longer post on this in a couple of days, and I'll post it on Twitter. But last night, I did some analysis. I took off 20% off every single metric for Robinhood going into September, meaning I am being super conservative. I'm assuming September does 117 million in contracts when we did 146 million in August. I'm assuming equities do 76 billion. I'm doing crypto does 4 billion. I'm assuming cash sweep stays the same at 22.8 billion. I'm assuming that lending goes down by 4 million. I'm assuming credit cards stay the same. I'm assuming interest on segregated cash and deposits is down 10 million. The only thing I'm being more aggressive on is margin, but I'm not being aggressive because they increased margin by $1 billion. So like if you just do the math, it works out really well. After doing all of those conservative estimates, all of them, and when I mean conservative, it's pretty conservative. I want to be really realistic here. You get to about $654 million in revenue. That is up 40% year over year. That's the third quarter in a row that Robinhood will pull up 40% growth. So I think if we escape a recession, if rate cuts end up being bullish, and we get 2 bips or 50 bips by the end of the year, and Robinhood's growing at 40%, I think the stock is $25. I could be wrong about that, but I really do think Q3 is going to be another good quarter. So we'll see what happens. We'll see how bad September is, but I'm assuming September is going to suck, meaning a down 20% month. And even with those sucky metrics, because of how good July and August were, and because of how bad last year was in terms of their beats, they're going to grow by 50% or 40%. So we'll see what happens, but that's my analysis on Robinhood. Robinhood right here going down. Robinhood's going down right now because probably Bitcoin's down and probably because the street didn't love those metrics, but I think that's a buying opportunity at the end of the day, simply because I think if you do the math on the metrics, it still comes out to be really well. Palantir just went green, 34.60. Look at that. We're green on Palantir. No, not bad. We are green on Palantir, 34.60. So street's coming back. It just turned red a little bit, but it's basically flat on the day. Someone said, so glad you mentioned Robinhood 1% just transferred my Charles Schwab account. Well, see, this is why I think September is going to be good for them, because that brokerage transfer is a really important thing. And people like you that are transferring from Schwab, you're going to get 1% on your money going into Robinhood. I think you're going to enjoy the user experience on Robinhood, but also Robinhood's going to get a crap ton of deposits. So seems like that is a strong thing that they're doing for the month of October as well. Yeah, 34.66 on Palantir. Let me see where the resistance is when it comes to 35. Let me see what the resistance is at 35. 35 on Palantir is, how many shares are there waiting for us? 27,000. 27,000. So 27,000 times 35 is $945,000. It's not a lot of money. It's not a lot of money. Come on, bro. 945 grand. I know someone in the chat has 945 grand ready to go. So, I think we should be able to get there. I mean, let's see. We did turn red early on in the day. This might be a little bit of a fake green candle that we're seeing right now, but momentum is there, dude. Momentum is there. I'm curious if this is retail or institutional, though. Part of me wants to say institutional because obviously it's S&P 500 news, but I don't know if the toots are buying in at these levels. Maybe there's a little bit more FOMO that's coming in right now from retail. So, we'll find out probably over the next couple of months in terms of how it plays out. But you got 34.54 right here on Palantir, up about 14% on the week. Walgreens down 1.4%. Bitcoin falling a little bit. NEO down 2.78%. NEO's had a great month since August. Meta is at 509. The entire market's starting to go red. Meta has some red candles right there. SoFi, yeah, fintech's getting hit. Robinhood's down 4%. SoFi's down 3%. Where's Square? I would imagine Square is down. Yep, Square's down 2.5%. PayPal has to be down. PayPal is down 2. Why is fintech getting hit today? Why is fintech? That's weird. Fintech's getting just like smacked today. Yeah, SoFi should not be down 3%, dude. There's nothing Noto said yesterday that would justify being down 3%. Same thing with Hood. We shouldn't be down 4%. I'm curious what the market's thinking right here about fintech. Maybe the market's thinking rate cuts are bad for fintech, which I get that argument, but For SoFi, their lending business goes up. For Robinhood, their transaction revenues business goes up. So that's very short-sighted by the market. Very interesting why fintech's taking a hit today. And that money is kind of going into Tesla. And it's definitely going into some value plays. But it's not literally going into tech in and of itself. Otherwise, the NASDAQ would have a little bit more momentum right here. It is going to Berkshire right here, up 0.5% right now. Ally down 16%. Oh, maybe. Did Ally have earnings today? Ally Bank? Holy crap, dude. Did Ally have earnings today? What's going on with Ally? Why are they? That's a bank. Why are these guys? Does anyone bank with Ally? Ally? Oh, hold on. We got some news on Ally. Hold on. Let's see this. Okay. So, this is what they said today. In July and August, we saw delinquencies up about 20 basis points versus our expectations, and we saw NCOs up about 10 basis points versus our expectations. We're clearly dealing a cohort of customers who have been struggling with the cost of living and are now struggling with an employment picture. Okay, that's not good. That's worsened unemployment by approximately 50 basis points since the beginning of this year. In particular, we spent a lot of time looking at the late stage delinquencies. So looking at a 61-day plus days past due, and those delinquencies in particular we're looking at because those really reflect the kind of pool of struggling borrowers. These are people that borrow money and don't pay it back for the next 2 months. And as that pool of struggling borrowers in these later stage delinquencies buckets has grown, it gives us pause in that we think about that 10 basis points of underperformance of NCOs in July and August, or senses that probably is going to expand in the coming months, just given the size of the population of struggling borrowers. And so that's really kind of one of the things that's put us on notice around credit development. Okay, so Ally is basically saying, hey, you're going to have a crap ton of delinquencies start in the next couple months. Maybe that's why fintech's getting hit. Where's Affirm in this? Affirm has to be down like 4%. Affirm has to be down on this. Yep. Affirm's down 4%, literally 4.09%. Okay, so Ally is the reason why everything's down. Basically, Ally saying the consumer is being super delinquent on credit cards, especially consumers that are really struggling. And that's affecting all of fintech because at the end of the day, these guys in some way or another have to deal with delinquencies. Robinhood literally has a credit card business, right, that is susceptible to delinquencies. SoFi has a credit card business. SoFi delinquencies peaked in March, though, so I don't know, based on the type of people that they include into their system, if they would be in the similar vein of Ally Financial. But if Ally is experiencing broad-based consumer delinquencies starting to happen, that's not good for fintech. Potentially, that is going to be a buy the dip on a lot of these fintechs if this thing is not that big of a deal. But I can understand why the market's tanking some of these companies right now. Tesla up 4.5%. All right, so money's leaving fintech and it's going into Tesla. That's what we're seeing today, folks. Tesla peaked at 235 last week. Let's see if they can continue that momentum. 1010 is on the way. Usually these events are buy the rumor, sell the news. So you would expect a pump before 1010 and a sell on 1010. But let's see if we can at least get that pump going into that $230 levels and see what's happening. Zocolt says the loan situation means that the consumer is struggling. The numbers coming out aren't accurate. Yeah, I think that's fair. And it's hard to trust a lot of the numbers that are coming out as well. So when a company actually shows bad numbers, you tend to take that seriously because most companies aren't, showing those bad numbers. Where's Palantir? Are we green on Palantir? Wow, look at Palantir, 34.68, back to being green. 34.65. It's toying with us, fell to 34.02, now 34.65. If we even hold 34 today, I would be more than happy. And if we end the month above 32, that would be incredible. But if it wants to make a run to 35, 36, I mean, who knows, man? Maybe there's got some more juice left in it after S&P 500. Federal Reserve Vice Chair Michael Barr says he will recommend regulators repropose the Basel Endgame and globally systematically important bank surcharge bank capital rules. Okay, I don't know exactly what that means. I'll look into that, but because you put it in all caps, Zozo Trader, I imagine it's important. So I'll take a look at that. But that seems like that's a little bit of macro news coming out. Bayray says, I'd be delinquent too if I banked with Ally. Okay, is Ally Bank one of those banks that's targeting low-income demographics? Is that, because I didn't know that. Is that what it's for? Because, I mean, that's probably not the most accurate picture, but it is still an accurate picture. Ally has $186 billion in assets. $10 billion market cap. What's their stock year to date? Their stock year to date, Ally stock, it's down 5% year to date. They went public in 2014. They're up 30% all time. Interesting. Maybe that's a little bit of the reason why Ally's struggling. Palantir 34.75, folks, going back to going green. I think it maybe wants to make that run at 35 again. Maybe. But let's see if that happens. Ally has significant loan car business. Speaking of car loans, I looked at some data on used cars today, and it's up like 30% since, median monthly car loan repayments are up 30% compared to 2019. So I bought my Honda Civic in 2019. I put a $5,000 down payment, and I paid $311 for the next 5 years, and I paid off my car. Now, if you get a car loan, if you just get an automotive loan, it's going to be up 30% compared to 2019. So I would be paying a lot more than $311 for that car loan. I think my rate was like 3.3% or something. So you can imagine that is up for a reason. Another interesting stat today from the Wall Street Journal. So the average credit card debt in the United States of America is $6,218, which is up 6% from 2019. And a typical wallet holds on average 2.7 credit cards. I think I have 3 credit cards. I have one is my main one, and then the other 2 are just like, sometimes I use them. I mean, if you call Apple a credit card, I guess I have 4 of them, but I don't really use the Apple card. Let me know in the chat how many credit cards you guys have. But there's one, my Chase one is the main one that I use. I mean, because I get miles for that and points. Robinhood will be my main one if I ever get it anytime soon. But besides that, that's where we have in credit card debt. So that argument by Ally about delinquencies kind of corresponds with the fact that credit card debt is obviously going up. It's at, I think, 1.6 trillion now or something. And so the question is going to be, how the market ultimately interprets that as we get into the rate cutting cycle, when they have to deal with the fact that, rate cuts are likely on the way. Ray has 8. Some of you have 4. You just opened one at JCPenney, you said. Okay, first of all, chat, it was Macy's. Okay, not JCPenney. So yeah, I have the Macy's one. I counted that. Kohl's and JP Morgan Chase. So those are my 3. Then I have Apple, I guess, which is the 4th one, if Apple counts. And then I have Robinhood coming in. So when I get all of those, that'll be 5 of them. Not JCPenney, bro. I'm not literally a 40-year-old woman that shops at JCPenney. Goodness, dude. Dude, I remember when I was little, my mom used to take me shopping to JCPenney with her. And every time it would just be a lot of middle-aged women in JCPenney. So I've always thought of JCPenney as that type of department store chain. I can't believe they're still around. Do they have a stock, JCPenney? No, they don't have a stock. Oh no, they used to have a stock in 2021. I think they had a stock, then they got delisted. Yeah, they don't have a stock anymore. It makes sense. Macy's stock as well, JCPenney, all of those department stores have been doing really bad. But it was packed when I went on Friday. It was packed when I went last Friday. Okay, most of you have about 3. Someone has 13. I don't know why you have 13 freaking credit cards, dude, but that's a lot of cards. 3 Chase and 1 Capital One. The Capital One, I know that one's the most preferred for most people, given the 2% cash back. But let's see if Hood can overtake them. It's going to take a long time, but if they can do that with that 3% cash back. Okay, let's listen to a little bit of some analysis in the context of what we were thinking about when it comes to a recession. Here's Anastasia from iCapital. Her argument is that we don't see any recession coming up. Let's take a listen to this, and then we'll keep going from there.
Stock markets. Joining us now, Anastasia Amoroso, Chief Investment Strategist at iCapital. Good to see you.
Good to
morning.
See you, Joe.
In studio. Morning. Inflation ever worry you anymore, or we've definitely shifted to growth concerns?
It seems like it's not the one that matters anymore. I mean, we are expecting an inline print of 3.2% core CPI, and I think that's good enough. I mean, importantly, we do see the 3 months annualized inflation that's coming down quite significantly, more so than the 6 months number. So I think that should provide support for the case for the Fed to cut interest rates. But you're right, Joe, it's not about inflation anymore. It's more about the growth concerns. And, so far what's unnerved the markets in this first week of September is that we're once again on the recession watch and the recession obsession, as I call it, only because the labor market seems to be weakening more than expected. So that's the driver in the markets right now. Personally, I don't subscribe to the view that we are headed for a recession. I think this economy is slowing, but it is still growing. And outside of the unemployment rate, you look at the range of economic indicators, and they're not implying high odds of a recession.
If the Fed were able to start its cutting cycle with a 25 basis point cut, that would be very positive, that it didn't have to do what it thought was anything more substantial than that, because things are going pretty well and under control. Will the markets test the Fed and push the Fed? I mean, good day yesterday, but last week I started wondering whether the markets were going to push the Fed to a 50 basis point.
Well, they may try. They try. And, there's a 50-50 chance that the markets are pricing in that we get a 50 basis point cut right now. So they certainly do try that. But the Fed is not really easily pushed around. And, Joe, what we have right now is not a state of an emergency. We have somewhat weakening labor market. We have inflation that's under control. GDP is still growing 2%. So things are actually in check. So I'm hard pressed to think that the Fed is going to say, let's do 50
it's
basis
too good to
points.
be true, though, Anastasia, isn't it?
Well, I mean, maybe it's slowing, so maybe it's not as good as it was once was.
But it's a very great place for the Fed to be.
Yeah, I think it's a very great place for the Fed to be. And, 50 basis points on the one hand could signal that they see something that the rest of the market participants don't. So in a way, I don't actually want to see the 50. But you could also make the case that, well, they do have a lot of room to cut. They probably have 250 basis points to work with to get back to neutral. So if they want to kickstart this cutting cycle with 50, that's fine. But here's what I would say broadly for the markets. It's not 25 or 50 basis points that matters. What matters is that we are in the beginning of a rate cutting cycle that's likely to go on for some time. And it is already providing relief to various parts of the economy, not just the markets, but the economy. And if you look at the 6-month SOFR rate, for example, it was 5.4% a year ago. It's about 4.5% today. If you think about your floating rate loans that are based off of that, they're already adjusting lower. And so eventually this is going to boost demand for credit. And actually, I shouldn't say eventually, because it is already boosting demand for certain loans, for commercial and industrial loans, for example. So I think the knock-on effects from a rate cutting cycle, whether it starts with 25 or 50 basis points, that knock-on effect is going to be strong in the coming months.
All right. So first of all, you guys in the chat are absolutely wild. That's all I'm going to say. You guys are absolutely wild. That's all I'm going to say. You guys are wild, bro. But second of all, I agree with what she had to say. I don't think we have a recession coming up. I think the rate cuts are ultimately going to be interpreted as bullish, but I'm also skeptical of how the market thinks of 50 versus 25. I think the cut is bullish. I don't know if it's going to be 50 or 25 and then what the market's going to react to. Palantir just went red. Entire market's going red. Ally Financial down 17%. Chris, I know you just joined the chat. You said, hey, why is the market going red? Ally apparently put out some argument around delinquencies being at really high levels, and it's taking down all of fintech. So that's what's hurting. Tesla is still up 3.6%. Where's the S&P? Are we still kind of green on the S&P? We just went red. Literally just went red. Now it is 10 a.m. You tend to get a little bit of a sell-off at 10:30. So we'll see if it can reverse, but we are going red. Robinhood below 1897. Bitcoin holding up kind of strong. Bitcoin, you would expect to go down a little bit more right now, but it's holding that 56, 57 range. But that Ally Financial news seems to be reverberating throughout the market. Some of the Fed members are speaking this morning. I thought they're not allowed to. I thought they can't. I thought they have a dark period before the FOMC meeting, or maybe they're not voting. I think the ones that are speaking this morning aren't the ones that are voting, because there's some that vote, some that don't vote. So maybe they're not voting. Oil's down 1.4%, 67. Oil might be causing a little bit of pain in some parts of the market, but oil going down is actually good for a lot of other parts of the market. Yeah, energy XLE is down 1.81%. Berkshire buying a ton of Oxy was not the move this year. I mean, dude bought, I don't know how many shares he bought, but I think the dude bought, can someone tell me how much he owns of Oxy? I think it's closer to like 10%, some crazy number like that. Oxy has done horrible this year, given the last couple of months. Let me see year to date, because it was up really well for a good amount. Yeah, it's down 15% year to date. It was up at one point, but he has been subsidizing that by selling a crap ton of Bank of America, which is down about 2%. So he has taken profits there. Also, if Apple collapses, we can't say Buffett didn't tell us, dude. We can't say Buffett didn't tell us. Maybe he saw the Apple AI event before the Apple AI event happened. He did some research. He realized there's no real reason to upgrade, and that's why he sold half his position. But if Apple ends up tanking, I think it would have been Buffett basically knowing before everybody else. But oil's down. Apple event wasn't exciting. And again, I'm not an Apple bear. I wanted the Apple event to be exciting so that you could justify more hype around AI. I mean, there was just nothing that was interesting about that Apple event. And then fintech taking an absolute wow. SoFi down almost 5%. It has to be because of Ally. It has to be because of the Ally news. There's no other way. It has to be this delinquency stuff. But that shouldn't affect SoFi. SoFi has different members. They have high FICO scores and they're like lawyers and doctors, right? Like theoretically, SoFi should be immune to this stuff. So that's weird that SoFi is getting hit this aggressively, bro. Especially when we've got rate cuts coming up. Like that is weird. SoFi is getting hit this aggressively. The Ally news can't be that serious. Also, Ally may have leaked consumer data of billions. Okay, so that's bad for Ally. That's not bad for fintech though. So I don't know why other fintechs are getting hit if that's the case, but that's definitely bad of Ally. Leaking consumer data of billions of people is not good. I've heard of Ally Bank. I never thought of it as an investment. Yeah, but down 17% on the day. Probably a bit aggressive here, but maybe makes sense. Why would SoFi have different demographics? Well, this is what they tell us, right? They tell us that they recruit people. Like even if you apply for a loan, dude, TJ, the guy who has a $6 million Robinhood portfolio, who comes on my channel every Friday. He won't be on my channel this Friday, by the way, because this Friday we won't be able to do the market open, or we're going to be able to do it, but like only for an hour, not for a long time. But he got rejected from SoFi for a loan or for a credit card. Not for a loan, for a credit card. His underwriting was horrible. They barely gave him any credit. So they're pretty restrictive. That is one thing SoFi is good at. They really don't approve a lot of people. If rate cuts come down, they can approve more people. Same thing with a firm. They can approve more people. But they've been aggressive on that. So I don't think SoFi is going to suffer with that many delinquencies. Also, here's a chart on this. Data Driven Invested posted this yesterday, that SoFi's delinquencies for 90 days, yeah, that peaked. That peaked in March. Look at that. So I would imagine that this is not going to affect SoFi, and this is a decent dip to look at. But maybe this is the start of something a little bit worse when it comes to fintech. Yeah, Adam in the chat as well. Adam does well for himself in life. He also got denied by SoFi. So SoFi's not messing around when it comes to denying people. But this is kind of weird that this is affecting the entire market. Psych Pilot says, I just sold a big old chunk of SoFi. All right, so you're contributing to the downfall. Bsoft says, I got rejected. Then I made SoFi my direct deposit, reapplied SoFi credit card, accepted. Okay, so maybe that's one of the reasons that they rejected some people. But that's weird. Fintech's taking a little bit of a beating there. That's weird. Where's Palantir? Are we still holding 34.50? Because that in a sea of red is not bad. 34.35. Hey, man, you can't complain. Hey, man, you can't complain. You can't complain with 34. For those that are just joining, we got $50 upgrade on Palantir by Bank of America. I just got the report from my plug, because I have plugs when it comes to these equity reports. He just sent me the link. I don't even know how he gets this stuff, dude, but he always gets it. So this is what we got. We did tap 35 right at 9:30. Okay, so let's read a little bit of this. Let's read a little bit of this and then we'll be done for the show. So guys, we have to end early today. I'm sorry we have to end early, but I'm acting like I don't have to get to the airport pretty soon. I'm just like, I was supposed to leave at 10 a.m. because I really do have to get to the airport, but we'll read this final thing and then I'll get out of here and we'll be done for today. No market close today, unfortunately, because I'll be in the skies. I won't be streaming the debate either, but tomorrow we'll be back for the market open for CPI. And then the rest of this week is going to be pretty fun. You guys will see why, but yeah, it'll be a fun week and you guys will see. All right. So Bank of America writes, embracing data science complexity since 9/11. Palantir's ontology creates a unique ecosystem to unlock the value of data and automation to enhance decision-making. We view Palantir as a key enabler of the safe and secure implementation of machine learning, AI, and upcoming data science capabilities like imminent quantum computing. Wow. This holistic approach relies on decades of work and experience focused on adding value to the mission. This complex and iterative approach allows the decision makers to determine where, when, and how to, and what extent they implement intelligent, processing solutions. I did not expect Bank of America to say Palantir is going to play a role in quantum computing. Talk about bullish, bro. Holy crap. Culture matters, pursuing value, not unprofitable TAM. Palantir's non-conventional sales approach, where the engineers play a key role, has been highly criticized by the software investors as a limitation to the product's capability and profitability. We disagree. We think this method makes Palantir's solution significantly more relevant to the users and gives Palantir a stronger pricing power. You know, I have a funny story about this. I want to say, I'll talk about it in a second, but this makes sense in a lot of different ways. The engineers create intimacy with the customer's mission and help shape the product to add real value. First, probably as a customized solution, but ultimately these improvements add value to the entire customer base as they are incorporated to the base product, in many cases generating upscale opportunities, aka BP signing a 5-year deal with AIP for Palantir. The energy sales bond is a key factor to Palantir's pricing strategy, where they target to get a proportion of the value add with less than 300 US commercial users and less than 600 overall. Palantir boasts a 35% operating profit. We view this approach as a key differentiator to Palantir's profits robustness, especially compared to other software companies where the path to profitability is just based on tapping a customer base large enough despite their initial unprofitability. Basically, Bank of America says, hey, they get into a customer, they provide so much value, that value allows them to convert that customer into a paid pilot, but then that paid pilot turns into a significant, long-standing, multi-year, multi-$100 million relationship, or multi-tens of millions of dollars of a relationship over time. And that's where Palantir monetizes when it comes to being an AI SaaS, because they show value via AIP bootcamps, and that actually brings them the pricing power that is necessary for them to be able to succeed. This is a hell of a report, dude. So these are just 2 paragraphs of the report. I'm going to download this and post it on my Twitter as soon as I end the stream, so you guys can read the rest of it and her numbers, her estimates, her S&P 500 stuff. I'll do a video on this in a couple of days going deeper into the report. But those first 2 paragraphs, I mean, to compare Palantir to quantum computing in terms of its ability to help. And basically that's a metaphor for saying, hey, there's all these different, use cases in terms of the technological revolution that's going on. Palantir is probably going to be a key player. That's where you start thinking, can Palantir actually get to $1 trillion, dude? Can it really be one of those companies, even though there's no consumer product? And then to give us a resounding endorsement of their sales approach in a world 2 years ago where their sales approach was horrible, it just shows you how much the company has changed. And that's why the title of this report is S&P Inclusion to Unveil the Overnight AI Success, 20 Years in the Making, Price Target to 50. Dude, Mariana gives no fucks anymore, dude. She says AI overnight success, 20 years in the making, price target to 50. She does not care. She is bullish. She is absolutely bullish. Okay, quick little story I want to say based on this report, and then I'll get out of here, and then I will see you guys tomorrow. So what she said at that second paragraph, I resonate with it so much, because she's essentially saying Palantir is taking approach, and this is what Karp talked about yesterday in that video. If you didn't watch that video, scroll back to the first 5 minutes of the show today, because Karp put out a video to all investors and employees around S&P inclusion. What she's saying and what Karp is saying is that they're not going through gimmicks to try to succeed. They're offering real value. And what this reminds me of is a conversation I had with a friend over the weekend, a friend that I really respect. He's like, hey, how much did you make off YouTube last year? And I was like, oh, 30K. 30K, it's really good money. I'm grateful for the money, but it's not like hundreds and hundreds of thousands of dollars. And he's like, okay, what's the plan to get that to 300K? What's your 10X strategy on the monetization? And I thought about it for a second, and I'm like, you don't get it. You just don't get it. Everyone, as soon as they start making a little bit of money, whether you're a YouTuber or whether you're in sales or whether you're Palantir, you start thinking, or at least the outside perception is, hey, how can I make more money? How can I 10X this? And I think the reason Palantir is succeeding is because they're not thinking about 10Xing the revenues. They're thinking about 10Xing the relationships with their clients, to then one day the byproduct of that relationship being a 10X in revenues, ultimately because they're a company and they want to deliver returns to their shareholders. So I sent him a long message because I respect my friend a lot. And I was like, this is not about the money, dude. I know you may think $30,000 is not a lot of money, but this is about building relationships with an audience. This is about going from 200 people joining live to 2,000 people joining live in the course of 18 months. That is something that is, you can't put a fucking dollar target on that. That is I'm just so grateful that people actually spend their mornings listening in the car, listening while they're at work, catching up on the stream when they're on their off shift. That matters more than billions of dollars, quite frankly, because what I'm going for is a brand that is global. What Palantir is going for is a company that stands the test of time and the most important software company on the planet. I mean, if we want to make the metaphor that I want to be one of the most important finance brands on the planet one day, that's a very long journey. So when people say, oh, Palantir, 20 years unprofitable. Oh, you've been doing YouTube for a couple of years. You're only making 30,000. It's like, dude, I'm in this for the long game. Palantir is in this for the long game. And I think it's a metaphor for anyone who's building anything. If you're doing something you're deeply passionate about for the long term, you go deep versus wide. And going deep versus wide means you invest in actually responding to people that comment under your videos, actually reading people's DMs, actually getting on the phone with random subscribers just to hear, why they've been enjoying your content, actually not selling a course or a paid membership to some private Discord or whatever, because if you got 2,000 people coming every morning, 10,000 views, you convert 5-6 people a day at $500, you'd be making $2,500 a day. Is it that crazy to convert 5 people to convince 5 people they should pay $500? No, YouTubers have done it. Finance YouTubers particularly have done it for the past 10 years. And a lot of them have made a ton of money like that. But to what extent have they ruined their fucking brand? Because no one deserves to be making $500 to join some stupid Discord group to talk about stocks when all that information is free. So I think being authentic in a world that is filled with inauthenticity is the Palantir approach. It's the Palantir methodology. It's why CARP is winning. It's why the company is winning. It's why the S&P 500 had to recognize them to get into that index, because they realize this is a company you can't ignore. And that's what brand I want to build. It's a brand that cannot be ignored. It's a brand that's respected. It doesn't always have to be agreed with. You don't always agree with Palantir on all their political thoughts and ideas, but you respect it because it's authentic. And that's what I'm going for here. And I'm going for that Palantir methodology because I think that is the methodology to win in life. So there you go. That's it. Thank you, everybody. Getting on a flight in a couple hours. It's going to be a really fun place I'm going to. Some of you guys probably already know, but you'll see in a couple of days what's happening. It'll be fun. I think you guys will enjoy it. And yeah, thank you for joining every day. Thank you for joining. It means the world to me. This is the most exciting job on the planet. And let's just keep winning. Let's keep doing what we have to do and keep going from there. Thank you, everybody. Thank you for all the safe travels. I appreciate it. Love you guys. Have a great, great Tuesday. Won't be streaming the debate, but I'll have some comments on it tomorrow morning. We'll talk about the debate. We'll talk about CPI. I'll be live 8:20 a.m., not 8:45 to get that CPI number. And then we'll keep going from there. Thank you, everybody. Have a good one. I'll see you guys tomorrow. Bye, everyone.